All right. Good morning. Comment allez-vous? How are you? Oh, I got to find the music. No. Oh, I have so many pages open. Good. I found it. Hang on. All right, cool. So, good morning. Welcome to QuantBox Live, where we get our global macro on. Cool. So, we're here to uncover the best fundamental opportunities out in the market. How do we do that? Well, we have to look at the macroeconomics, but we also have to look at market sentiment. So, it's economics and the market combined. Yeah. So we put it all into pretty colors so it's easy to understand. Things like, hey, do you have 20 years of data that shows what has actually happened in the month of January? Oh, you don't have that? Well, that would be terrible, right? Well, of course, everybody in this meeting does have it because we're all subscribers of QuantBox. Very cool. So if you're watching this on YouTube, which what half the days I actually upload the video to YouTube, the other half I forget. So if you're actually watching this on YouTube, why don't you visit quantbox.com and join so that you can actually put some confidence into your trading because you're making trading decisions based on facts and data. Where do we get these facts and where do we get this data? We pull it directly out of central banks and like today, we're going to look at the commitment of traders report. So we get that from the Commodity Futures Trading Commission. Wow. Yeah, that's like real data. Yeah. It's not good to know, it's need to know. So, anyways, quantbox.co. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Okay, logging in. Hey, remember that Q1 outlook you guys asked for? I was going to do it last week. Well, I wasn't able to do it last week. So we're going to do it this week. I think everybody here has already signed up for it. But in case you're watching the recording, hey, guess what? Just log in and sign up. We're going to do it on Wednesday. Yeah. I know Jim says the price point. Yeah, when I was developing, I was sitting at a Starbucks with my daughter. She's working on her homework, and I'm working on my homework. And I created it, and I just like as a placeholder, I went 1, 2, 3, 4, and then never went back. But anyway, so oops. So, anyways, cool. So now it's the same cost as before, plus you got to buy me a beer. Sorry. Yeah, so anyways, so cool. Just like a heads up, we're going to do that where I look at the next 90 days. We could look at it, go through all this complicated stuff together with sort of a different point of view. Plus, I pull in a lot of other data that's not actually, it's either hidden inside a QuantBox or not easily accessible inside a QuantBox or just not in QuantBox. So I do a lot of that stuff as well. And it's a great opportunity for people to ask questions. Yeah. So, anyways, so that's what we're doing. That's happening on Wednesday at noon. Okay. And then let's log into the database. And by the way, I'm very disappointed. My development team, we're supposed to do all these updates a couple of weeks ago. They were supposed to be out or before the holidays. And then that didn't get done. And then they're like, oh, we're so sorry. The holidays. I'm like, okay. And then they're like, it's going to be done Friday. These updates and all these tweaks that we're working, they're not done. They're just not done. I don't know what's going on. So I'm going to have to do some yelling today. I'm going to have to do some Janet Yellen today. But just to show you, like the hard stuff is done. It's the easy stuff that's not done. But like as far as the AI alert service that we're doing, you can see QuantBox has created this. This was sent January 6th. I'm the only receiver of this. And the problem is, like, one thing is we need to break this into a couple of different things, like these score changes. We're working on the way to like separate them and prioritize them. So these might be text messages to you, but like this should be an email every Friday now. Every Friday, And this should be separate, not one email. It should be a separate email. This doesn't need to be texted, but this is the AI that's already working. It's already looked at the COT data and just sent you just a really simple email, right? On Friday, like, hey, COT has been updated. Here are the important changes. Right? Bearish or short biases and long biases. Really cool, right? So, um, so it's the hard stuff's done, but anyways, but the easy stuff's not done. No, I'm just getting promises. So, anyways, I apologize for that. Um, and well, I will bitch and complain on all our behalf. So, anyways, all right. So it's being done. Lots of upgrades in the background, but it's the AI stuff is the really big um the big thing that's bugging me. So, anyways, let's take a look. Oh my God, yields over 4% again. Oh no. Well, the market was pricing in rate cuts, a lot of them. I mean, an extraordinarily large, boy, I can barely say that, number of cuts coming from the Fed. Well, we've known that that's basically wrong. And it just can't be. Like there were 6 cuts or something priced into the market. And I covered that in great detail on FX Street on Friday. Went through all the data and I showed how it's all done, and I showed people how to use the pricing of stuff to calculate these cuts. And there's just no way that 6 was going to happen ever. So and now not only were there 6, but soon, and which doesn't make any sense either. And so I went through all that on Friday. Watched the YouTube video on FX Street. It's the FX Street YouTube channel. Um, if you want to know how to do that in greater detail. But the bottom line is there was just too many cuts, and there's certainly no reason for the Fed to cut quickly. So the market needs to adjust. And what happened on Friday, of course, is non-farm payrolls came out, and it was a great number, which is horrible. Wait, what? Yeah, yeah. A great number is bad because the great number means there's no need for the Fed to cut. And so all of a sudden, that means the cuts that were priced in have to be priced out. So too many treasuries were bought, so people dump some treasuries, the yield goes up. Okay. The stock market should behave poorly in a situation like that. Why? Well, when the Fed makes borrowing money cheaper, the companies that borrow money, which is everybody, are now more profitable. Imagine you had a job, and no matter what you did, you go to work and you make 100 grand a year. All you have to do is show up and not suck. I think that's how most people work, right? You show up, and if you don't suck, you get paid. Great. $100,000. So, what if though your mortgage, for whatever reason, let's say you refi your mortgage and you get a lower mortgage. So now your mortgage is $500 less per month. Well, now you're more profitable. Your costs are fixed, right? Or your income is fixed, but your costs have fallen. So now you have $500 extra a month to play with. Okay, you can spend it on lattes or you can save it and go on a nice vacation. But the thing is, you have that extra $500 is now disposable income. Well, the same is true for companies. Let's say whatever amount of money they've planned in their business plan to make in 2024, if suddenly interest rates fall during that period, they are now more profitable. Their income hasn't gone up. It's just their costs have come down. So anyway, so if costs don't come down, then if people were betting on that to happen, profitability going up, well, that hasn't happened, and now the price needs to come down. So, anyways, that's the train of thought. Bitcoin's got a big week. I think it's Wednesday is the big day for Bitcoin. I'm surprised it hasn't gone up another $10,000 by now. So it shows you how how quickly people were front running that decision. On the 10th, it's the final day in which the SEC must rule in favor or not in favor of multiple cash ETFs around Bitcoin. Spot, okay? Spot and cash is the same thing. Spot ETFs around Bitcoin. And if they rule in favor, there's going to be probably 5 or 6 or 7 different ETFs you can then invest in. But here's the thing, it allows institutional investors to invest. And so Wednesday, Bitcoin could possibly, most likely will become legitimate. So I don't know, 12 weeks ago, Bitcoin was 20 grand. It hit 50 or got pretty close to hitting 50 recently. So when it at least doubled, okay, in recent history, Bitcoin has doubled. So for those that believe Bitcoin's going to 1 million, well, Wednesday would be the starting point. So keep that in mind, anyways. It's the second week of the month, so be prepared. In the next, when you're in this period of the month, you should start expecting inflation data. That's so. We'll look at the calendar in a little bit, but just be prepared for that. Let me zoom in. Okay, and not a lot happening yet. Be careful. This is real long term, medium term, short term. Nothing. Even this one is like weekly bias, risk off. Yeah, but just ever so slightly. Be careful. Just be careful. It's a mixed bag. Okay, let's take a look at Asia. Oil's down quite a bit. Ooh. Ooh. Makes me think, did non-farm payrolls and so let's put three things together. Non-farm payrolls was good, so that's bad because the Fed doesn't cut interest rates, which is bad, which could lead people to think monetary policy will lead to a recession again. Therefore, oil's down. Okay. You see all of that? Well, it reminds me, if you're in my Council of Investment Advisors, we're meeting at noon today, and we will look at the facts. Are we going into recession or not? That might be a guess. It might be a reaction, it might be overreaction. Maybe it's smart, maybe it's dumb. But I can tell you, if you're on my CIA, we'll go through it. We know for sure whether that's right or wrong. So I'll see you at noon. Okay. So, anyways, that might be an opportunity to buy, or if you are bearish on oil, you want to set up a sell the rally scenario, which isn't happening in the moment, right? Because you either buy the dip or sell the rip. So let's get rid of oil because it's such a big outlier. And the way I look at this is nothing's happening. Nothing consistent is happening when you look at the currencies as an aggregate. Now, inside of the data, you can see yens are strong. Okay. Now, in my day trading group at Investor Bootcamp last night, we looked and I think we had CAD yen maybe was going to be an up and everything else was at resistance, right? Like triple top, moving sideways type resistance. Well, apparently resistance held. So anyways, it looks like if you're going to put a pattern together, all the yens are strong today, and therefore all the yen pairs, right? Yen is strong, so the yen pairs are down. We're also in a period, right, in which the stock markets don't tend to perform very well, and NASI's down right now. That might be a theme this week. Like for example, if we only look at the indices, okay, FTSE, NASDAQ, and DAX are down, big German stock market. Dow is just slightly, right? These are all slightly up, slightly, like 0.2%. But of course, the week hasn't started. Okay, cool. Did you guys spend a lot of time reviewing the seasonality charts last week? I begged and I pleaded and I prodded, I hugged, I slapped. Yeah, good. Anyways, this is what I want to get to. Okay, so yields are up the most. Boris says, hey, to be 100% honest, yeah, you're not sure. Okay, we can go over that. Also, you were asking about mentorship. So email me if you're interested in that. If not, check out the FX Bootcamp program, one way or the other. But if you need help, email me, Wayne at fxbootcamp.com. All right, so NASDAQ way down, S&P 500 way down. Okay, big losers, huh? Big losers. Those are the biggest losers in the last 7 days, not the last week. You're like, that's not how I remember last week. No, that's the last, you know, 7 trading days. It's rolling. It's not a week. It's the last 7 days. So, anyways, gold not doing great. Okay, FTSE down, DAX down, Dow is down. Okay, Nikkei break even. Which shows you the Nikkei is very, very, very bullish. If everything's down and it's break even, you know, then that's very bullish. Very bullish. Well, it shows you like if you're going to borrow money at 5% versus borrow money for free, you probably would always pick the free one, right? Would anybody like a free mortgage? Here's Jean-Guy. Here's $1 million. Take it free. Just pay it back. You're like, okay. Right? Versus 5%, right? So that's what's happening in Japan. And it has been for a long time. Those companies, remember the example I just gave, those companies get to, fund their cash flow for free. Thank you to the Bank of Japan. Okay. So, anyways, they're better off. Cool. That pound has been coming back, huh? Look at this. Pound is strong. Pound is strong. Pound is strong. Yeah. Okay. Pound. CAD has actually been a bit strong too. And you can see just the pound is just ever so stronger than CAD, but CAD has been fairly strong as well. Dollar strong. Okay. And look at how this ZAR, right? The South African Rand lost almost 2.5% over the last 7 days relative, right, to the buck. And then this email or that you will be receiving soon automatically shows that there was a big decline in the South African Rand. Okay, that's measuring the contracts. This is measuring the relative price. Anywho, Okay. Money going into the Dow, money going into the CAD again. Remember last week, CAD was a big winner. Money going into the NASDAQ. Okay. But it's actually less bears for NASDAQ. No one bought the NASDAQ. Yeah, Jim, me too. Yeah, me too. Mm, And and honestly, like my management style is I'm always the good cop. I'm a sissy pants. I'm a gummy bear. Back when I used to manage a team of how many people did we have? A couple of hundred people. Um, my vice president was the bad cop. And I was the good cop. I'd take you out for coffee and talk about your feelings. Um, and then you'd get back to the office, and then he would have taken all your stuff off your desk and thrown it into a garbage can. And I'm like, oh my God, Paul, how did you do that? I wouldn't have thought of that, right? To just throw everyone's crap in the garbage. Like, hey man, you're about this close to getting fired. And I'm sitting there and I'm buying you a latte and spending, 90 minutes with you to try to get you back on track. And so anyways, I'm the teddy bear. I'm the warm gummy bear in your pocket. Um, but every once in a while I'll have to, send a nasty gram. So maybe that's it. Maybe that's it. I'm too much. That's why we're behind. But those developers are behind, and it does bug me. Trust me, it does bug me. All right. So biggest loser we already saw South African rand. Okay, shows you how thin, how few contracts there are. Nobody's trading the South African rand, so be careful. Right? You're like it's a 14% week over week change. Yeah, it was a little. Anyways, yeah, look at the number of contracts. Compare that, to the the 10-year team note, which is, a million contracts. But anyways, nonetheless, that asset has changed favor. So like why would it change? How about that? Think about this. Why would this be so dramatic? The market, smart money, because this is only institutional investors. Their positions are so large they're required to be reported to the CFTC. Okay, great. So the market for the rand, at least the smart money in the United States for the rand said, "Oh my God, the Fed's not going to cut. They're not going to cut anytime soon. Like maybe June. Like forget March, June." Now realize because this is institutional investor money, we'll call it smart money. Well, this is Tuesday. That was Monday. It was reported to the CFTC, right? No, sorry. Tuesday it was reported to the CFTC. Friday, after non-farm payrolls were updated, but non-farm payrolls came out, and non-farm payrolls told us the Fed weren't going to cut. But the smart money already made that adjustment. They made the adjustment no later than Tuesday. And then everybody else adjusted after non-farm payroll. So you can see the smart money is literally a week ahead of the market. And so if the Fed's not going to cut and interest rates are high, then like emerging markets are hurt the most because falling interest rates in the United States, because emerging markets debt is in the reserve currency, then sort of like the cost relief of falling interest rates has gone away, right? I'll look into it, Jim. Right now, yeah, bigger problems. But yeah, me too. I'll say this. I agree. Okay. Yeah. So anyway, so that this tells you a lot, this information. Okay. And look at this, even though the Japanese stock market's performing well and it's heavily, heavily, heavily bullish, some money is coming out. It's not as attractive as it once was. And the money looks like it's going in to, let's just say Dow and Nasdaq represents the market, which is funny because S&P 500 here, SPX, is that the way I look at SPX, it's just a balance between the Dow and the Nasdaq. So anyways, but it's not being affected at all. But Dow, right? Dow and Nasdaq look bullish, like money has gone into it. But it seems to me much of this is just bears losing the bears. Or Dow being the best here over the week did catch a bid. This is buyers of the Dow, and there are less bears. So that is actually just the best combination: less bears and more bulls. But it's a defensive play because it's the most conservative of the stock indices. It's got the lowest beta. And they did buy it, and they're not selling it. So it's quite bullish. Now, this is going to change. Does anyone know why it's going to change today? Dramatically? Why is the Dow going to be down today? Boeing. There was a flight. Alaska Airlines was in the sky, and part of the fuselage just blew off. A brand new. It was like a 2-month-old 737 Max 9, 2 months old, and part of the side of the plane blew off. So the way it works, just in case you're an aviation lover, okay, you have 737s and you have multiple types. They get bigger and bigger and bigger. But if you're going to make these things, you want to make one fuselage. And then you go to the customer, do you want it long or do you want it short? Well, if you want the longer one, you have to have more exit doors. But if you want the shorter one, you don't have to have many. And it depends on how many rows you put in. The more rows, the more exits you have. So anyway, so what they do is they just make one fuselage and they put all the holes for all the doors. And if you configure your plane and such, you don't need the extra door, they just plug it with a fake door, and then they configure the seats, and you don't even really know the doors. Well, there was never actually a door there. They just put the hole, and if you don't need the door, they just, well, one of those blew off. The brand new airplane just popped off in flight. Oh my God. So Boeing is going to have a very bad day today, and it's going to pull the Dow with it down. Yeah, Adam's like, the aircraft has had a real bad time. You know, honestly, it's probably dumb luck, or maybe it's a mismanaged company. I don't know. But the first one is those Maxes went down because of a software glitch. Okay. And you're like, so Boeing is not really a software company. It's more of a, let's weld something today company. And so they're like, what? So I'm sure they just hired someone to do that for them. And well, they made one little mistake in a million lines of code, right? Oops. So then they finally get in the air. And now, some subcontractor probably, like, instead of doing torque it to 35 pounds, they torqued it to 30 pounds. And I don't know, like the smallest mistake on one aircraft. And now every aircraft, not even the Maxes, they're being grounded. And you're like, it doesn't make sense because all the other planes are probably safe. But let's ground them all. You never know. Now there's this overreaction. But you know what? That one dude that didn't torque it quite right just cost $20 billion. Yeah. So good cop or bad cop? Who should you send to that guy? So, yeah. So, who's the subcontractor? It's not Horizon. There's a subcontractor that's also a publicly traded company, and it's going to get crushed today. Like, it's probably going to go out of business type thing because they've made a few extra mistakes, not just this one. Oh, Jim's like Boeing's down 8% already. Yeah, yeah, yeah. So, anyways, that's going to come down because, well, this information didn't happen. It happened before Friday. So get ready for, even though money went into Dow, they're going to be punished. Yeah, Adams was like, yeah, well, they're both like if you're judging the airplane by its worthiness of actually flying, I'm sure it's a fine aircraft. The 737 is not a new airplane. There's something like every 20 seconds, a 737 either takes off or lands somewhere in the world. Like there's millions of these things, millions of these things. They fly, but a series of unfortunate events. Huh? It just, yeah, yeah. But hey, you got to get these right. No matter how you look at it, the side of the airplane is not supposed to pop off while you're in the air. Human error, most likely. I'll give you another example. I was on a 737 going somewhere, and this was, I don't know, 100 years ago. I'm going somewhere and I'm looking out the window, and I don't like sitting at the window. So it must have been a long time ago. And I'm looking out the window, and we're taxiing out, and we're actually prepared to take off. But as we were taxiing out to the runway, people like the workers working on like the baggage handlers and all those guys, they were like they would stop. I remember looking out the window and they just stopped in the middle of their whatever they were working on and looked at our airplane like, holy crap, they were staring at me. I mean, are they looking at me? Right. But it was weird because everyone just stopped in their tracks and they were looking at our plane. It was very clear. Like dozens of people at a time. You're like, it's really strange, right? And so we taxi out and we get to the end of the runway and we got the brakes on. You hear the engines power up, right? And then they power back down and they taxi back to the gate. You're like, what just happened? Someone left the baggage door open. Right? And all the package handlers are like, wait. Yeah. Oh my God. Like the doors are wide open, right? We're going to take off, ready for takeoff. Someone forgot to shut the door. And who knows? Maybe there was still like Frank, the guy that shuts the door. He's probably still in the baggage. He's like waving, like, help, help. Right. So, anyway, so somebody called it in, stopped the airplane. Uh, had nothing to do with the 737, but that could have been a disaster. So, anyways, these things happen. All right. So, just quickly in the news. Okay. In the news, we got somewhere out there, CPI is going to be important. I think it's CPI. If it's not this week, it's next week, but it's probably out there. I'm going to guess. I don't know why this ain't coming up. There we go. I'm going to guess around Thursday is probably CPI if it's this week. So let's take a look. So today is the 8th. Wow, look at that, huh? So it came in a little bit better, but retail sales year over year, big negative number. Europe's in trouble. Wow. I'm still waiting though. I'm waiting for the 30% off at Porsche. I didn't get my black my black cyber Monday deal from Porsche. Wouldn't that be great though? If car companies just emailed you like anything you want, 30% off. You're like, wow. But it ain't happened yet. Do, do, do. Okay, some new, retail sales out of Australia, very interesting. Do we care about that? Look at the unemployment rate. Wow, just crazy. 6.5. Wow, just amazing. But again, that's a consequence of their style of capitalism. If you ever wonder why Europe always has high levels of unemployment, it's just a consequence of their decision making. Okay. Again, not good, not bad, just a consequence of their decisions. Ba, ba, ba. Inflation out of Australia coming up too. So we got a couple of different Aussie, right? Lots seem to be going on here. Update this. So we're jumping all the way out. Core inflation rate USD. Yeah, so it is Thursday. Sweet. And the interesting thing is that if I were me trading this, the thing that I would look at is I'd go to the EIA, the Energy Information Agency. It's a government agency, right? And they track, it's a great place to just get like gasoline prices and diesel prices. You can get both. And if they're up or starting to head up, in particular, remember these numbers are for December. So you'd go to the agency and you'd look it up and you would start to see if diesel and gasoline prices are going up, CPI is going to stop falling. Inflation's going to stop falling. And that's really interesting because remember, the market is priced in like we're going to go to 2%. So what if we don't? So that's how I would look forward. Okay. Now, when you look at core, this is actually an interesting number, this core number. There's lots of things that I was misled about when I first started trading 20 years ago. I heard at least 1 million times the Fed doesn't look at core, or the Fed looks at core because it takes out volatile food and energy prices. That's just not even true. They don't You don't measure core because those numbers are too volatile. That doesn't make any sense at all. They remove it because Fed policy doesn't impact how much corn is grown or how much oil is sucked out of the ground. Or right? They don't control that supply part of the equation. So you separate them to then to remove those influences, but it has nothing to do with the volatility. It's strange to me, but anyway. So I look at that, and every time I see core, I'm like, I think of that in the back of my brain, like, anyways. But we are worried about headline inflation returning, and I think the biggest thing that is going to contribute to high inflation is high energy and food prices, right? Yeah. So pay attention to that anyways. So that's way out there Thursday, right? Thursday. All right, cool. So anyways, yeah, I think it's going to be an interesting week. Once again, I implore you to go through seasonality, and not necessarily the dollar one, but you should go through everything one at a time. Think about each one. What does the, let's say, the S&P 500? What does it typically do this time of year? And if you're going to do critical thinking, what's unique about this year versus the 20-year average or the 5-year average? What's unique this year? What are our concerns for the market? And I'll give you a hint, wink, wink, nudge, nudge. Is the Fed going to cut, and when? And how does the election impact things? And then compare and contrast, right? And go through. Be thoughtful. It could take 20 minutes per asset if you were really to think about it. And this process is similar to what I'm going to do on Wednesday. But the more you think about it now yourself, the more the information I share about my thoughts on Wednesday will be important to you. The best thing is we agree on certain things, and you put that down and say, okay, that adds to some confidence. And what about the things we don't see eye to eye on? Well, neither of us know the future. So that must be even more important. There isn't right or wrong, but how did you perceive it? And how did I perceive it? And you're like, right? And now you can, that would be the one I would spend more time thinking about. Okay. So it's not me predicting the future on your behalf so you can become rich. That's not the right way of looking at it. Okay. This is about you building your own foundation. So again, go through seasonality and think about this year versus that. Right. And, and then compare and contrast. Drew says, hey, any thoughts on Larry Williams' 2024 report? To big, yeah, for your big profitable Jades. You know what? I know I have not. I know he does a lot of COT stuff, and he's in much longer trades following the COT. Um, I'm actually in a book with him. It's called The Wiley Trading Guide. It's just some obscure book, but I wrote a chapter, and he wrote a chapter in there too. But that's the book where I said, how did I phrase it? It had to do with if you don't do the work, you won't find success. And I said you might find yourself 70 years old working at Starbucks because you need the health benefits, and you enjoy eating day old muffins out of the garbage. And I'm like, whoa, I took it a little too far. I was a little rough, a little rough, but I think I made that point. But I haven't read this report. If you have it, email it to me, Wayne at fxbootcamp.com. I'll take a look at it. Yeah, cool. Yeah. So, anyways, I do have respect for him. I don't know him and I don't follow his work, but I do know of the work, right? And he's one of these guys that's been around longer than me. So if anyone's been in the business for 40 years, they have something to share. There's no doubt. And back when I was learning, and I guess we should go back to this so you have the colors. Back when I was learning the Commitment of Traders report, he was the dude. So 20 years ago, when I was doing this research, and I would actually download the actual file. I'll show you how to do it if you want. But it was him that was the only person talking about it. All right, so what we're talking about is the Commitment of Traders report, which is here. And so 20 years ago, he was talking about following these. I do week over week. What he does is he looks at basically the number of contracts, and then when they peak, then you get out. Or when they bottom, you get in. But the seasonality is going to overlap with that very, very well. Okay. And so it's sort of the same thing. So just quickly, I'll show you cftc.gov. Okay. Big government agency. And you go right here, Commitment of Traders Report. So this is what I was doing and Larry Williams was doing 20 years ago. Now he was teaching and I was just doing it for myself. But you go here and you just want futures only. You don't want options. And this is it. This is what I would download. There, see? Isn't that nice, guys? There's all the information you need. Euro. Okay, cool. Australian dollar. Cool. Peso. Real. Hey, hi. Kiwi dollar. Nice. See? Look, there's all the information. So this is what I did 20 years ago. I'd look at this. Okay. This is the same report. Okay. This is the same as this. Which one do you like better? Right. So you can get this for free. For free. But luckily you're a subscriber to QuantBox because let me tell you, I mean, honestly, I'd spend hours and hours and hours looking at this, figuring it out, analyzing it, all that kind of stuff. And now it looks like this and it's organized beautifully and I can manipulate it so quickly and say, oh, look, the money's going into Dow. How long does it take you to figure that out? That the Dow is the best out of all of this? Takes a bit, doesn't it? Whereas they say in America, it takes a minute, which could mean hours. But anyways, welcome to America. So that's it there. But I'll take it one step farther. As I showed you, oh, wrong one. This one. Here's all the QuantBox emails. So it was the 6th. And boom. So now it's sped up. So we've gone from, let me park this here. Okay. We've gone from this. Here's the evolution of your world, of making smart, informed decisions. Okay. Most people don't even log into government databases and download the facts. So most people don't do that. The top 5% of traders get this data. This is what it looks like. Then the next part of the genesis is now we put it in, we organize it in not just pretty colors and stuff, but in a database that we can manipulate. Okay, numbers of contracts long and short, we can manipulate all this. Great, very, very nice. And the next one is, boom, I can just email you and give you the information. You don't even have to log into the database. You just know, you're like, oh my God. Okay. Oh my God, 7.73 on the Dow, huh? Wow, 13% decline, 14% decline in the rand. You just know now. So I took it using technology. I've taken a process of me manually sitting down, logging into a government database, downloading the data, and spending hours analyzing it. And now I can give you that same information in 1 second. The data will get updated on the CFTC website. QuantBox updates. The AI reads the QuantBox update and then sends you an email. And so you would have known Friday. No, that must have been Saturday. Saturday morning. Bing. Hey, just want you to know there was an update. Now, if it was a text message, it would have been Friday night. But I don't think you need a text message at 9:30 at night to read the CFTC report. You're probably out having a life. Can you imagine you're in the middle of the opera and your phone gets a text message and it echoes through the opera hall? And you're like, dude, I need to know this stuff, right? Well, the fat lady's mad at you now, right? Yeah. So, anyways, so look, that's the evolution of our world of making informed investment decisions. So, without further ado, peace on earth. May the pips be with you. May your profits be above average. Cheers.